Hello, everyone, and thank you for coming to today's panel on the global and regional Sukuk market outlook. I'm Mariam Meskin from DebtWire, and as mentioned, we have two distinguished experts in the field of Islamic finance that will be walking us through this panel. It's been a phenomenal year for Sukuk issuance, as already highlighted. In the GCC alone, we've seen around $50 billion worth of Sukuk issued since the start of the year. Now, according to data from Dealogic, that marks a 30% year-on-year increase. Driving that growth has been a number of factors: the inherent need for issuers to diversify, a very deep investor base, and a few new entrants to the market, including from outside of the typical jurisdictions. Looking to the next 12 months, there are some headwinds on the horizon that we will get to throughout the course of this discussion, not least regulatory changes that could promise to change the nature of the Sukuk market as we know it. I think it's a good idea to start by getting a lay of the land. So, Mustafa, perhaps you can walk us through your assessment of the global and regional Sukuk market so far this year.
Sure, thank you, Mariam. And I think that, as you correctly mentioned, Sukuk has had a tremendous growth year. We've seen issuances increase year on year, every year for the past decade or so. I believe that global issuances at the end of this year will end somewhere around the $200 billion mark, with total Sukuk outstanding scheduled to exceed $1 trillion, which is a phenomenal achievement for the industry. Makes up about 80% of the Islamic finance industry, 24% if you exclude Iran from the Islamic assets market. I think what has happened is that Sukuk has been concentrated primarily, as you mentioned, in the core markets, right? So you have the markets of Malaysia, Saudi Arabia, Indonesia, UAE, and if we add Islamic Development Bank as an issuer, collectively these five markets and Islamic Development Bank make up about 80% of issuances, right? Which is a significant concentration, and we do want to see more internationalization of the Sukuk instrument. We are seeing a lot of issuance from the other GCC countries. We are seeing other markets like Turkey and Pakistan continue to issue and access and tap into that Sharia-sensitive capital. And what is also heartening to see is that the UK had the return to the market. They did their second issuance. Hong Kong continues to issue, and Philippines has issued, and new markets such as Maldives, Egypt have all issued in the last 2 years or so. So we are seeing growing interest in that. There are a number of structural challenges that exist, in terms of the regulatory framework, in terms of those institutions that follow IOFI standards, how to implement that, finding tangible assets to be able to issue. I'm aware of many different potential issuers who wanted to issue Sukuk instruments but had to revert to conventional bonds because of some of these structural challenges that exist. So there are still challenges that we have to address. But we're also seeing a number of emerging themes also promote the rollout of Sukuk as well. So sustainability, I think, is the biggest headwind that we see in that space as countries and markets are driving towards their nationally committed goals, and they're trying to offset their carbon footprint. The issuance of sustainability-linked Sukuk, ESG or others are significantly increasing. And I think with the introduction of guidance notes and taxonomies that are being issued, that's going to help simplify the issuance of these instruments. And I think another interesting area is the retail Sukuk space, enabling retail consumers to be able to tap into capital markets and take advantage of that investment instrument. Indonesia is a market that has done that very successfully, and today about 20% of the Sukuk outstanding is retail Sukuk in Indonesia, which is a very interesting story. UAE has another very strong success story in national bonds, Sukuk al-Watani, as a program that is utilized to issue Sukuk to retail consumers and then fund strategic initiatives and projects off the back of that issuance. So I think there are a number of emerging themes that will help to continue to drive the Sukuk space, but structurally the challenges have to be addressed to really tap into that potential.
For sure, that was a very comprehensive overview. Thank you, Mustafa. Mohammed, I'd like to ask, what has been your standout development from the year, whether it's a particular trade or a development that you've seen in the market?
Right. Thank you, Mariam. I would agree with Mustafa. I think we've seen a great performance of the Sukuk market year to date. I always have more conservative numbers than Mustafa, obviously being part of a rating agency. So for us, we've seen almost $180 billion of Sukuk issuance year to date till the end of November. And we've seen also a significant increase in the issuance in foreign currency denominated Sukuk. We've seen most of the activity coming from the core markets. We haven't really seen issuance. For example, last year we had the Philippines doing their inaugural Sukuk. This year, most of the activity was still concentrated in the core Islamic finance countries. But there are obviously always issuers that are looking eagerly at the Sukuk market and trying to find the best structure or the best window of opportunity to tap the market. This year, I think we've seen IRCAP Holding issuing its first Sukuk. And we will see, I mean, if this will continue in the next couple of years.
Okay, fantastic. The globalization of the Sukuk, which you just touched upon, that's something that I'd like to get back to a bit later in the panel. I think there's a lot to be said there. But if we had to sort of forecast what the next 12 months are going to look like in the market, I know there's one big theme that we want to discuss, which is obviously AOFI Standard 62, which we'll get to later on in the discussion. But sort of aside from that, looking at the next 12 months, what are your outlooks in terms of volume issuances, the volume of issuances?
Right. I think the outlook is still positive, given the fact that the Islamic finance remains concentrated in its core countries and that these core countries are doing well. Countries like Saudi Arabia, for example, are in the middle of the implementation of Vision 2030, and this comes with significant financing needs. Some of it are being satisfied with the Sukuk market. So positive outlook is driving the activity. The other factor that is driving the activity is the expected reduction in interest rates. I think overall we expect the Fed to cut the rate by 175 basis points. That's inclusive of the 75 basis points that were already delivered, so another 100 basis points between now and the end of 2025. And that would improve the liquidity picture globally and on the Sukuk market in particular. Sustainable finance is also another avenue of growth. But when it comes to the challenge, we see two challenges that the Islamic finance industry and the Sukuk market share in common with the conventional space, which are the geopolitical risk, although when we stress tested the GCC banks to even an extremely high-risk scenario, we ended up with a conclusion that the banks are resilient and have sufficient means to withstand the outflows of external funding or local fundings or even asset quality deterioration. The other factor is oil price and where oil price will land. We have an assumption of $75 per barrel for the next few years, but obviously factors like, for example, the performance of the Chinese economy will definitely contribute to shaping the picture when it comes to oil price. And the challenges that the Sukuk industry faces on its own are the weakening of the legal documentation. We've seen some structure being issued with legal documentation that would push the sponsor to bridge contractual obligations to make the transaction work, and the adoption of Standard 62, depending obviously on what's going to come in the final standard.
Mustafa, are you similarly optimistic, or?
I am. I think that we have seen a lot of excess Sharia-sensitive capital that still is untapped and has not been served. We've seen consistently when we look at the last 2 years that issuances of Sukuk tend to be significantly oversubscribed compared to comparable conventional issuances. We see the pricing advantage in these as well. I've even seen in one of the markets in the GCC where an issuer who simultaneously issued a conventional and a Sukuk issuance get over 100 basis points benefit on the coupon that they had to pay on their Sukuk instruments. So I think that there is a lot of excess capital that is still there that needs to be tapped into. And as the interest rate environment starts to reduce, I think that a lot of issuers that may have held off expecting this reduction to come will then enter the market as the Fed starts to cut their rates. I think that despite that positivity, the structural challenges cannot be understated. So one of the challenges is around finding eligible assets that you can utilize and structure into those instruments. And from our conversations with stakeholders, that is often one of the biggest reasons why they don't enter the Sukuk space, because they don't feel that they have the assets that they can then carve out and utilize for the issuance of those instruments. And then I think the second challenge is the regulatory or the Sharia confusion. And I think that that is an area where they've said that it's getting worse rather than better, right? They felt a few years ago that everything was settled. They knew exactly what documentation was required for the issuance of Sukuk that would be broadly acceptable by investors, and today they say that there is more uncertainty. They don't know going forward what is going to be or is not going to be acceptable, and that is increasing, the cost of issuance through regulatory consultation or legal consultation and other things. And that continues to be, I think, a challenge that will, if not addressed appropriately, will continue to, hamper growth as we go forward.
Definitely. Mohammed, I'd like to come back to you for just a moment. I'd like to quantify expectations for next year, and given that you did mention S&P's figures, which I'm sure are incredibly reliable, have you produced a forecast for what Sukuk volumes will look like next year?
Not yet for 2025, but if you look at the performance of the market until the end of November, we reached almost $180 billion. That's already above our forecast for 2024, which were at $160 to $170 billion. And given the fact that the environment looks promising and that interest rates are coming down, this number, in the absence of any shock induced by Standard 62 or any other regulatory development, this number can only go up.
Fantastic. I'd like to come back to the topic of the globalization of the Sukuk product. We just had a fantastic panel in which we had a number of speakers from different jurisdictions talk about their experiences with expanding the reach of this product. In the last 12 months, I should say last 12 to 18 months, we've seen a handful of issuers from outside the typical Sukuk issuing jurisdictions enter the market. So we already mentioned AirCap earlier this year. Prior to that was Air Lease Corporation, ALC, last year. And we also saw the Philippines, of course, with the sovereign Sukuk last year. Now, there is a bit of a debate going on in the market as to whether this is the start of a more long-term trend and whether there is going to be a significant pickup in interest in these products, or whether these are still sporadic one-off issuances that are mainly driven by an opportunistic desire to get a reduction in basis points and to diversify the investor base. Mohammed, perhaps you can walk us through whether you think this is, as I mentioned, a long-term trend or still sporadic.
Currently, we're still in the phase where it's still sporadic and where you see some issuers tapping the market episodically when they see an opportunity, for example. And we've seen that with Philippines, we've seen that with Egypt, IRCAP, Air Lease Corporation, and also a few years ago with GECC, General Electric Capital Corp, issuing its Sukuk in 2009. And the reason why they do it, it's because when you do a Sukuk, you not only speak to the traditional roundtable of fixed income investors, but you also get to speak to the Islamic investors. You speak to the Adib, you speak to the DIB, you speak to other Islamic investors that cannot invest in the conventional products. And Mustafa mentioned that in some of the transactions, you could end up with a pricing benefit. And actually, this is good for the market because for the time being, there's a shortage in the volume of issuance of Sukuk compared with demand, which means that Sukuk investors buy the Sukuk and sit on them until they mature. And as we see more and more issuance, as we see the volume of issuance going up, we would probably see a better liquidity in the Sukuk market, secondary market.
Now, if this trend continues to grow and we see more issuers coming into this space, I wonder how that impacts traditional dynamics, especially when it comes to things like pricing. Traditionally, the Sukuk market has always offered a pretty competitive edge when it comes to pricing versus conventional bonds. Now, if the market continues to grow, how are things like that impacted?
I think where it could change is currently, and you would hear that argument, people tend to think that Sukuk are more resilient in the episode of market volatility because the pricing barely moves. And the pricing barely moves because people don't trade them. They buy them, they hold them until they mature, because if they start trading them, they don't have a replacement instrument. So one possible unintended consequence of having more issuance hitting the market is to have this possibility of trading and to have this high liquidity, which could increase the sensitivity of the pricing of Sukuk to what's going on in the overall market.
Mustafa, from the vantage point of the LSE group, I'm very keen to hear your thoughts on how you think the market can actually attract more foreign issuers to this space. As mentioned, we've seen it happen here and there, but there are some structural obstacles that are really stopping that issuance flourishing.
Yeah, no, I think that, and even to the previous point, with new issuers coming to the market, I think it's going to be a tremendous benefit, because once you have a deepening of the Islamic capital markets and you have more real-time pricing based on actual transactions, you're going to get more comfort for other institutions that hold a lot of capital to divert that to the Sukuk instrument. From our perspective, and as you mentioned, London Stock Exchange Group is the leading listing venue for a number of international Sukuk as well. The biggest challenge that we always see is regulatory clarity, right? And I think that we were in a situation a few years ago where we had that regulatory clarity in the market, and there was a lot of interest from non-traditional issuers who wanted to tap into that. And recently, I think it's become murky again. I think what we require is the international standard-setting bodies like IOFI and others to, develop clear, practical standards that can be implemented. I think that we need then from the traditional markets of the GCC and Southeast Asia to provide their guidance on those standards and to what level they're implementable and acceptable in those respective markets, and that will help to simplify the issuance. And just one point on your earlier question around whether people are tapping the market from an opportunistic perspective or from a strategic perspective. I think what we've found very often is that initially they look at Islamic finance from an opportunistic perspective, but once they go through that issuance process and they tap into the market, they realize that there's something more there. Yeah. And that initial opportunistic intention becomes a bit more strategic for them. They become regular reissuers. They try to motivate corporates to also look at that. Once the sovereign issuance is done, the corporate issuances can often follow suit. So we do see that, even if it's an opportunistic move in the beginning, it's something that will help the market because more people will be familiar, and that may turn into a strategic aspiration going forward.
Yeah, those are fantastic points, and tie very nicely to the panel that we just had, which of course you hosted. Now, it wouldn't be a panel on the current state of the Sukuk market if we didn't talk about the thing that's been the talk of the town, essentially, which is AOFI Sharia Standard 62. This standard, if adopted as proposed by AOFI, has the potential to completely transform the nature of the Sukuk market as we know it, essentially transitioning it from an asset-based market to an asset-backed one. Now, as you can imagine, several implications for both the issuer and the Sukuk holder. Mohammed, you and I have discussed this topic before at length. We've even recorded a podcast on it, actually. Can you explain to us where the market currently stands with 62, and what are the key implications that you'd like to draw out for the audience?
Right, thank you. We have no visibility on the timeline, and we have no visibility on how the final standard will look like, and a lot will depend on the calendar and on what will be in the final standard. Now, the first question is, would that impact the existing structure? The answer is no, because you cannot change anything in the legal documents unless you go and you request the consent from the investors. And assuming investors are rational economic agents, they would not accept to be in a worse off position. Obviously, you cannot exclude that some issuers that are already struggling might jump on that train and say, guys, the rules have changed. We have to restructure our Sukuk, and that is a risk that we foresee, but it's a limited risk. On the new issuance, we see several possible negative impact of Standard 62 on the Sukuk new issuance. First, on the cost of issuing the Sukuk, because as you mentioned, we're moving from an environment where the assets stay with the issuer to an environment where the assets move to the investors, and that could result in additional costs. So who's going to bear these costs? Would it make the Sukuk less competitive than the conventional bond? Secondly, on the feasibility. In some countries, in order to move an asset from the balance sheet of a government to outside of the balance sheet of the government, you need a special law. In some other jurisdictions, you can't even do it. For example, in Saudi Arabia, foreigners are not allowed to own real estate freely, and that could cause an issue for the real estate developers, or even for mortgage-backed Sukuk, for example, if people were to look at issuing Sukuk in order to resolve the liquidity challenge that the Saudi banks have been facing. And also, That could be additional risks for the investors because some of the risks that until now were covered by the sponsors, like the risks related to the underlying assets, will be transferred to the investors. So investors would end up taking, for example, the market value of the assets, which could change the nature of the instrument, not only from an asset-based, although I don't like the asset-based qualification because it has no legal value, but moving from an asset-based to an asset-backed or to an equity-like instrument. An equity-like instrument means different base of investors and different pricing mechanism. So essentially, I mean, we could end up losing the fixed income investors. We could end up being in a situation where the fragmentation in the market increases between the adopters and the non-adopters. And that is something that will depend on what would be in the final standard and what would be the timeline of implementation.
Yeah, I think one thing is almost certain that, as we've seen in previous cases where standards have been proposed and adopted, there has been a teething period whereby issuance does temporarily stop or slow down, I should say, while the market comes to terms and accommodates this new standard. That is potentially what we could see if 62 is adopted. Mustafa, I'd like to get your thoughts on this. I mean, there's a lot to say, so just hit me with your thoughts on 62.
Sure. So I'll play the optimist to Mohammed's pessimist here, but all the concerns that Mohammed raised are accurate, right? And these are genuine things. When it comes to sovereign issuances, you cannot in 90% of situations have sovereigns, transferring assets out, excluding the entire fixed income market from Sukuk issuance, who will end up holding, in some cases, 50% of Sukuk issuances are held by conventional institutions that are doing it for having a fixed income type instrument and so on. There's a number of challenges that exist with the standard as it stands today. My expectation is that, IOFI has their, consultation process and structure. You have a number of central banks that sit on the board of these institutions and on these committees who will be providing feedback on this standard, and they understand the realities of what is required to practically be able to issue the Sukuk instruments, right? So my expectation is that, while the standard has this aspiration to shift the market a bit more towards, an asset-backed instrument as opposed to asset-based, I think the practicalities of the market don't really allow that to be implemented in the way that the standard currently states that they will be done. And I think that the committees that will provide that feedback and consultation will temper that down. Unlike Standard 59, which did have a way to be addressed through the contracts and through the structures, you could amend the contracts to be able to adopt that if you're having a true sale of an asset that is fundamentally very different in the underlying contract. So I do expect that the standard will shift from what it is written today to something that is a bit more practical, so that we don't have that shock in Sukuk issuances that potentially we might have if this was implemented as it's written right now.
Yeah. We have come to the end of the panel, unfortunately. I'm sure that there was so much more that we could have talked about, but I'd like to thank both of our panelists for offering such a comprehensive and insightful overview of the Sukuk market, and thank you all for attending today.